What's going on, YouTube? Back at it again once more with another exciting banger. Got my boy Beezy Banks in the building. If you
Yes,
don't know,
sir.
you won't know. My dog moved real silent. You know what I'm saying? Listen, we're going to be doing a reaction video to the Lambo Raul video that was taken down. Now, some of you guys might be in the comments, how did you get this video? How do you get this video? Listen, relax. I was in Puerto Rico. You know, when you're a real profitable trader, that's what you do. You take trips, you heard? So I was in Puerto Rico. Before I got on the plane, I downloaded this video, and actually I fell asleep while I was on the plane, so I didn't watch the video. So what better way to watch the video? Doing a reaction video for you guys with my boy Beezy.
You know, I'm actually excited that you actually had the video. I wanted to watch it, but you know, supposedly it got taken down for whatever reason. I'm not exactly sure. Supposedly there's accusations going around that he was scamming people. I have no idea what that's about. I'm a fan of Raul, so I'm excited to actually see what this video is about.
Exactly. Let's dive straight into it. Let's see what's going on.
And this is a long video, so everyone make sure you get your snacks right, because we're gonna be right here all together just watching this. So yeah. All right, let's get it.
One of the biggest names in the trading space and the only trader with a Bugatti Chiron.
I feel like a lot of these newer smart money concept traders, they're trying to impose it onto other people. Like, oh, if you don't trade smart money, like you're not making any money in the market. It's like it's almost impossible. When it's like, okay, was there smart money concepts like 35 years ago on Wall Street? There's ICT.
Bro, I talk about ICT. I talk about that all the time.
About how he can't physically trade.
Raul has built an empire in the forex space and also was the first trader to reach $100,000 in payouts with FTMO.
You can't just go as a newer trader onto any prop firm and have the expectation to actually pass and start making money. And I feel like a lot of the traders nowadays, like their goal is to become a funded trader, when it's like, what about trading your own capital? If you're highly profitable, some of these prop firms will ban you, and I've seen it. So for me, what I normally tell a lot of people is,
what I find,
before going into this, I don't know if you know, but FTMO banned me.
Whoa.
Yeah, we'll talk about that later though. That's a side note.
interesting is on Twitter when I see an ICT trader, they're trading EU. One of them will be buying, another one will be selling the same price action at the same day. Like, well, that's not a strategy then. How can you have two people that trade the same thing doing the opposite?
I feel like it's great that there's a lot of people getting into this space, but I also feel like a lot of people don't really understand what they're getting themselves into. Like, I remember when I first started, I thought trading was you'd buy stocks, when price would go up, you would sell them to make a profit, and it's just like, there's just so much more than that.
You mentioned ICT and SMC. So many people use it and so many people stand proud with it and say we are the best. So what is your view on it, and have you spent much time maybe using some pieces of it?
Bro, pause it right there, bro. Real quick. Yo, ICT. If y'all boys are watching this, the ICT gang, y'all is a cult. Y'all is the most do or die in the industry.
Turtle soup.
I'm telling you, y'all be going so hard on Twitter. Like, you can't even get a word out with these guys. These guys will smash you in the comments. Everywhere.
It's crazy, bro, because I do a lot of YouTube live streams, and on a day-to-day, I always have people, what is your strategy? Is it ICT? And I don't know why, but people always correlate profitable traders with ICT. And it's like, bro, when coming into the industry, I did not study any ICT videos because it was so boring to me. And I was kind of already established at that point too when I did come across it.
Right.
But it's truly a cult when it comes to ICT people. I really don't understand why that is. And ICT and SMC is literally the same exact thing. I didn't know that. I didn't know. At the end of the day, no hate.
Yeah, I didn't know that.
I'm going to say this now though. No hate to the community. If you trade ICT and if you're profitable, all to you. But I just don't like how they force it upon you. You know what I mean?
Right. It's a cult. It's a cult. That's what it is.
I'm joined by somebody you've probably seen. You've been in the space for well over a decade. I've been following him for probably 5-6 years. Raul over here, and he's flown all the way from Miami to Dubai.
Yes, sir.
Potentially moving over. Let's see. But bro, thank you very much for taking the time and joining. Well, first I want to ask, how long have you been in the game, in the trading space?
Oh man, since 2018, like mid 2018.
Okay. Is that when you started to come online, or that's when you started yourself?
No, that's when I started myself. I think I started coming online with trading like late 2019.
Okay.
I want to say so.
Oh, you blew up quick then.
Yeah, I mean, it doesn't really feel that way. But when I kind of like look back on it, it's like, 7 years, let's call it, or so, that I've been in the trading space. It's like time has really flown. Yeah. Time really has flown, but it's like you look back and it's like 7 years. Wow, how many days is that,
Yeah. When I remember starting my own journey, the thing that everyone does, you look online. Who else is a trader?
Yeah.
What do they do? You're one of the OGs, man. You up with Q and a few others. Like, you're the founding fathers of the online trading space, and you've probably seen all the highs and lows, or the crap, or the whole stuff. So first thing I want to ask you, years and years into the game, and now we are in 2024. What is the landscape look like to you in the online space? I'm sure you've seen a lot of young kids, maybe in Miami, popping up and trying to do things in a different way or copying your way of doing things. What is your assessment of the industry right now? How do you see trading as a whole?
I mean, I guess the first thing that pops into mind, trading nowadays, maybe over the last like 2 years, the first thing is ICT, right, and smart money concepts. And I feel like this cult has been generated around ICT and smart money concepts. And for me, it's like, okay, there's no one real way to actually trade. It's just if you have a system that has an edge in the market and has a positive expectancy over the long run, you're going to make money, right? And I feel like a lot of these newer smart money concept traders have really like imposed their system of whatever they learned from ICT. He's an individual, correct me if I'm wrong, right? And smart money concepts is what he made, from my understanding, right? They're trying to impose it onto other people, like, oh, if you don't trade smart money, like you're not making any money in the market. It's like it's almost impossible. When it's like, okay, was there smart money concepts like 35 years ago on Wall Street, and those people were making money? So it's like it's no. So I mean, I feel like it's great that there's a lot of people getting into the space, but I also feel like a lot of people don't really understand what they're getting themselves into. Just as kind of anybody would start. Like I remember when I first started, as well, what I thought trading was just basically buying and selling stocks. Like you'd buy stocks, when price would go up, you would sell them to make a profit, and that's where you made money in trading. And it's just like there's just so much more than that, you know. But I really feel like the space is going into I don't know if I'd want to say a more positive light, because I feel like a lot of people are super egotistical in this space, and it's like, okay, well, you're in this space, we need to remove ego as much as you possibly can from the markets, but like, you know, you're one of the most egotistical people that you could possibly meet. So it's kind of hard to tell.
What
But I
about
definitely
now?
think there's
Because
a lot of
there's
innovation.
a lot of things have changed in terms of when you first started out, there probably wasn't as many people to look up to online or learn from. Now there's a million people to learn from.
Yeah.
That could be good or bad. It could be good because now the good people rise to the top, whereas previously
course.
there was less choice or easier to misguide. But also now with the rise of prop firms, which maybe wasn't as prevalent when you first started.
It wasn't at
Do you
all.
think it's a better time to be a trader now, or maybe back when you and I started?
The thing is, right? So I guess touching on the first topic with the people, you'll see them come and go. You'll know if they're still here after 2 years. You could tell if someone is legitimate or not, if they really made money in the markets or not. They'll come and go really quick, like this, right? And you've seen the rise of some people and the fall at the same exact time.
We're starting to see that now.
I think it's a lot better that people are
Right.
getting to the markets now, yes. But I also feel like there's a misconception with the prop firms, because you can't just go as a newer trader onto any prop firm, whatever challenges, rules they have set in place, whether it's a futures prop firm or a forex prop firm, and like have the expectation to actually pass and start making money. And I feel like a lot of the traders nowadays, like their goal is to become a funded trader, when it's like, what about trading your own capital? You know, so I know there's a ton of people nowadays, like they don't trade their own capital, they solely only trade prop firm capital, but people still don't realize like that's not your capital, and it can be taken away from you at like the snap of your fingers. You violate one of their rules, and like that account is done. and
Facts.
You're gonna have
Pause
to go back
that,
and spend
pause that.
another X amount of weeks on recoup.
Like Raul just said, it could be taken away from you. Listen, guys, I was funded with the funded trader, and that exactly happened to me. I literally said, "This will never happen to me." That's just for the unlucky people or whatever. I'm good, and I go to request 2 payouts, and just like he said, the account was taken away from me, and they actually breached another account I had that was in process, and they shut down their company, and you just never know. It's kind of a gamble.
But to be
So I think trading your
but
go ahead.
to touch on that though, bro, is just kind of like you gotta take it to the chin, right? It's a part of the game, and it's inevitable. I got 30K still to this day tied up with my forex funds. I lost 19,000 with funding talent. I was caught up in the funded engineer. I was caught up in true forex funds, not true forex funds. Yeah. Is it true? Bro, I'm getting so mixed up with. There's so many of them, and I've tapped into a lot of these.
Right.
It's just what comes with it. And I understand what he's saying is like practice with your own funds first and then move over to a prop firm to see if you can pass the evaluation to get funded. But to be honest with you, trading these evaluations help me as a trader because it give me boundaries to stay
Right.
within.
Me too. Me too. It really shapes you as a trader because you have these rules, and man, that was probably like one of my downfalls in the beginning, because coming from a time period where there wasn't prop firms around, you could just freelance, and there's no boundaries, and you just end up over leveraging and blowing your account. And when I started trading with FTMO and I finally got funded, I realized, oh wow, these rules actually shape you and keep you in the game for the long run.
Yeah, I agree. I agree.
Recuperating and getting another funded account. And not even just that, like if you're highly profitable, some of these prop firms will ban you. And I've seen it.
Yep.
You know? So it's like, is that really the expectation you want to go for? So for me, what I normally tell a lot of people is, one, like if you're just starting off, don't even think about prop firms. I would always just start off with, even
If
if it's
Timo
only
banned me, bro, it's
$1,000,
just crazy.
$2,000 into your own personal account to really get specific in the game.
But they banned the
Using
whole
very
country
proven,
now, so
consistent
welcome to the
profitability.
team.
I'm not talking about like 3-4
Right,
years. I'm
right.
talking about over the span of at least a few months that you can actually make a return on your investment. Then that's when you could actually start looking to use prop firms to your advantage, which is a great tool because I didn't have that back then. Every time I would go in, and I wouldn't blow $600, $500. It would be okay. Well, I just blew my $3,000, $4,000 account. It's like, okay,
Adds
well,
up. Yeah.
you know what I'm saying? So I feel like there's both pros and cons, but I also feel like it's probably one of the best times to get in too, because of all of the knowledge that's out there, and then all the tools you can use to your advantage compared to like 7 years ago.
When I speak to traders, which I've spoken to a lot, every trader seems to come to Dubai at some point. The ones that are less than 3 years in the game, 3 to 5 years, they're more like they studied one school of thought, usually a SMC, ICT kind of vibe, and they usually stick to it and they don't look around. Whereas in your situation, a little bit longer, have you spent time looking at other strategies and ways of trading, or is it you found one early on and just refined?
It was really, I just kind of found, I looked at different strategies in the beginning, right? But that wasn't like a super long period of time. That was maybe like 3 or 4 months, right? And then from there, just refine, see what worked, see what didn't work, and how can I continue to just improve my edge inside of the markets. And really, like the foundation of my trading system, and it's weird because like I feel like even like today, like when 3 months passed down the line, I feel like I'm gonna be 10 times better than what I am right now. So there's so many different topics I feel like one could actually pick about when it comes to trading, whether it's technical analysis, risk management, trade management, whatever the case might be, is like there's always something to refine, and you're always gonna find some form of a barrier or a battle. And especially when it comes to like the level up inside of trading and how much money you want to make, how much tolerance do you have towards risk, there's always something to actually improve on. So for me, it was more just like, okay, well, once I found the system, was just consistently refining it. Should I add rules? Should I drop rules? And it's just like, okay, well, how do I want to manage my risks in certain situations? When should I put in more size? When should I take size off? How do I want to manage my trade? Like in my trading career, I've done so many different like trailing stop loss methods, right? So many different entry methods, and just seeing like what is most profitable for me. And it's just like a consistent game of just learning about the markets, evolving with the markets, and then myself, and then me as an individual evolving myself as well.
Have you seen the markets change at all? Like when in the years, what was working for you back then
Definitely.
might
Of
not be.
course.
What have
Definitely.
you noted in the years of the changes of the market? So out of the dozens and dozens of prop firms that exist in the whole firm has hidden from their no viewer, you get
You skip
I'll
to
give you an
that.
example. One of my certain setups, which was one of my favorite setups, even to this day, I'll still trade setups, would be like a break and retest, right? I feel like the majority of people know what a break and retest is. You can use it in many different situations, many different market conditions, right? Back then, it had a lot higher of a win rate compared to now. And it's just simply because when price would come to a certain zone nowadays, give you the random example, yeah, sure, price can come into that zone, and then I'll get my entry signal, take the entry, and then price would immediately go and stop me out, and then go into my favor. So it's like, okay, well, why is price doing that?
Yep.
And you start like kind of dissecting that and looking at different ways on actually avoiding that potential loss. And that's one thing that I'm super big on nowadays, is how can I avoid the dumb losses that I take in the markets, because that's automatically going to increase my profitability. That's one thing too that I feel like a lot of people are just really focused on, like the winning trades and just having bigger winning trades, when it's like, okay, well, what if you just start avoiding like those dumb trades that you actually take in the markets?
That point you mentioned, I like it. And
Right.
when it comes to looking at your trades,
That's big.
usually earlier on in the career, people are like, okay, if I won, it means good trade, and if I lost, it means bad trade. And you get a little bit older or wiser, and you're like, okay, well, I can take a good trade in terms of I did everything right to fit my plan, and it just happened to be a loss. It was factored in. Maybe that setup is a 50-50 win rate kind of one, and it just happens to be one of the losses.
100%.
So if I start to now change everything because I took a loss, that's the wrong thing to do. So when you correctly look at wins and losses, same for a win. Let's say I got a winning trade, I made some money, but it was a reckless entry. I just jumped in because of emotion. I should probably not pat myself on the back. That was the wrong decision to make, and that's the maturity that comes in. And now you mentioned kind of like silly mistakes or dumb trades that you shouldn't be taking. How do you identify one of those dumb trades versus a loss that is supposed to be a loss, and I'm not supposed to change anything about it? How do you split them two up in your reflection?
It really depends. And I'm glad you brought up this point, because I feel like a lot of people don't talk about this enough. Like, you can have a losing trade and it still be a good trade. You followed all of the rules of your system. You executed perfectly.
Real.
Great R multiple potential in that position, and it still be a losing trade, right? Versus people could think, oh, just because I made money in this trade, it's a good trade. It's like, not necessarily, because in the long term, not only are you building bad habits about not following your system, but like you're also building like this false narrative that just because it's a winning trade, it's a good trade. So for me, it just really depends on the situation. Obviously, off the bat, I know if it's a good trade or a bad trade, if I broke my rules or not on my specific setup that I'm trading. So I'll have different setups in the markets for different market conditions. When markets are a little bit more trendy, I like to take breakout setups. When markets are a little bit more in a consolidating phase, I like to take bounce play setups. So it just really depends on the setup that I'm actually taking. But for me, what's going to determine a good trade versus a bad trade ultimately is just if I follow my rules on the setup. So every single morning in the pre-market, it's like, okay, well, the market is done X, Y, and Z in the pre-market. We could potentially see price action do X, Y, and Z or ABC. I'm going to look for this setup based off of ABC. If ABC doesn't happen, then I'll look for this setup based off of, I don't know, call it X, Y, and Z again. right? And if I trade outside of that pre-market plan and I take any setup outside of that, then I know that, okay, well, maybe I'm leaning on the more bad trade phase. What's the reasoning behind me actually taking that specific position? Why didn't I follow ABC or X, Y, and Z? Did I jump the gun? And then even if I did follow like my ABC setup or my XYZ setup, right? And I executed too early. I exited too late. You know, it'll definitely change the rating of how I view that actual trade itself, because I could execute perfectly and I close the position at a 2R multiple versus my initial target, which was like a 4 or 5R multiple, and the price goes to that 4 or 5R
Rizzy, I was talking
multiple.
about
It's
this
like, okay,
yesterday.
well, like I did good, but I clearly still need to focus on my
left
trade
money on the
management.
table,
I
yeah.
left, yeah, and that's one.
I'm gonna pause that for a second, because we were actually talking about this yesterday, where I was like, bro, you gotta let those runners run. And the best way to get over that feel of like, oh, I gotta close it right now, is just wherever you are comfortable with taking profit, just put a trail there, so that way if it does come back, it just takes you out of your initial TP. But this is, see, it's a perfect example. Even like a top trader like Raul, he's still going through that battle of like, let me just secure the bag. But he's like, I want to evolve and start holding my trades a little longer.
Right.
Thing that
Yeah, I think it's
I'm focusing on right now is like, okay,
the growth of your trading, right? Like you don't trade the same way as you did when you first started, right?
Right.
So, I feel like every year you're probably tweaking something. And like he was talking about in the beginning of the video, he was talking about, redefining. And I feel like you never stop redefining. You always kind of, because the market is forever changing. So you kind of go with the flow. And sometimes the current isn't going this way. So you redefine and you adjust this way. And you just adjust with the market.
You got to. I call it the 6-month mark every time, because every 6 months, that's when I notice there's a shift in the market. Every 6 months.
Right.
And you just got to adapt. And then, you know what I mean? By then, you're already at the next 6-month mark.
Definitely.
I really need to focus on R multiple because I've been leaving so much money on the table recently. It's like I'm too focused on the P&L, these certain trades. And it's like, okay, well, if I find that I'm tracking my statistics and I see that I'm leaving too much money on the table on a lot of these trades that are winners, I'm averaging maybe a 2R multiple, which is still good compared to the win rate, but it's like, okay, well, I could be having like a little bit of a higher win rate and also having a higher R multiple, which is going to significantly increase my profitability. Why am I cutting these trades short? And how can I improve that? So that's kind of how I would determine a good trade versus a bad trade. But even within the good trades, I'll determine like, okay, well, what's the rating of this trade out of, like, let's call it like 5 stars, right? Was it a 3.5? Why was it a 3.5? And how can we make it a 5-star trade? The goal ultimately would be to take like your A plus.
I kind of like
a 5-star.
I kind of like that. Looking at it, look a 5-star rating
in our lives that will
looking at it
impact
like
our
that.
trading decisions in the markets every single day, and that's why trading is so difficult. But it's also so rewarding when you actually do make money in the markets too, because you're navigating one of the most difficult careers and one of the most difficult markets to actually trade in, and you're still coming out on top. Like it says a lot about your character, I feel.
You mentioned it sounds like you have playbooks where you have rules, and then you just come to the market and say, does today's price action reflect any of my plays, let's say?
Yeah.
So have you essentially modeled out all of your trades into particular setups, or is it more a case of I have these concepts I like and then I apply them based on the day, or is everything predefined?
So, I mean, I wouldn't really say everything is predefined. Everything in terms of like entry signal is predefined.
Okay.
Stop loss areas, it varies trade by trade. Take profit areas is also predefined as well. I like to trade really from level to level. So that's easy to determine. Take profit and stop loss placements. Entry signals, I'm taking almost the same exact entry signal. So I have 3 different types of entry signals depending on how aggressive I want to trade that specific market or that specific day. I have my aggressive signals. I have my kind of conservative, and then I have my conservative signals depending on the type of setup. And then what I could do is go back and see which entry signals make the most sense for me, right? Which entry signals have the highest win rate, and which entry signals give me the best R multiple. So for me, I know like if I'm going to trade an aggressive setup, an aggressive entry signal with the setup, like the setup could be exactly the same, right? Every single time, but what can change is the entry signal itself. Okay. So for me, I know if, okay, well, if I'm going to be taking an aggressive entry, the majority of the times my R multiple is going to be my planned R multiple, that is, because planned and realized are 2 different things, right? My planned R multiple could potentially be a 5-to-1, a 6-to-1 because of the type of entry signal and how aggressive that entry signal actually is compared to the entry and the stop loss size, right? And I know that maybe with that specific entry signal, I'm going to have a little bit of a lower win rate simply just because I'm entering so aggressively in the markets. Like price can go and stop me out. And typically I'm going to know if I'm right or wrong almost right away. And in situations like that, it's like, okay, well, let's size down because our multiple is going to make up for it anyways, right? And then there's certain times where I'll take a conservative entry signal where maybe like, price has to give us a pretty decent sized move. And
I'm sorry, I got to pause this for a second, because I was once again talking about this yesterday with Ant, where I'm like, bro, you need to be thorough. Listen to how he's talking. He's not missing not a single detail. He has everything down to the nitty gritty of his whole system. He's like, I can tell you this. He's very thorough. He's very nitty gritty down to the details.
He's always been like that. He's
it's
always been like
important.
that. Right. Yeah, definitely. Yeah, he's always been like that. I actually I took a one-on-one with Raul back in like 2019, and he's always been the same way. He's always been game plan. We're gonna plan our risk like this. Uh, like everything strategized. Everything is technical. Like we're not going in blindsided. We're gonna know exactly what we're gonna do, and this is how we're gonna handle our emotions here, and this is how we're gonna handle this here. I think the problem is with a lot of traders when they buy, I guess, courses or anything from these mentors, they think they're gonna understand these concepts immediately. And to be honest, Raul's been preaching the same thing for years, and that didn't click for me until like my fourth year of trading. So I think some strategies and lessons have to be actually gone through and experienced over and over in order to ingrain in your actual memory. Because me and you both know trading is psychology based more because you go through these swings in the market like of mood swings and like losing streaks and winning streaks, and to actually go through that you have to be on a live account actually forward testing. I don't know about you, but I'm not a really big fan on back testing, but
I used to
forward
be.
testing, yeah, me too. I used to be, until I realized you can't go through a losing streak emotionally on
Right.
a back test. You know what I'm saying?
Yeah, you got
So
to take those lashes. You got to really feel the pain. You got to have those dark days. I mean,
right,
that's what makes a soldier at the end of the day. And this is not an easy sport that we play. I preach this all the time. You got to be mentally savage to play the long game. If you're not willing to see the
exactly.
4 year mark, then you're not willing to see change. Because I agree with the 4 year mark is when you really start to see the like, okay, got it. I've been through this one too many times already, and now just
Right.
repetition and just redefining and everything he's basically saying now. So I just want to point that out real quick. You have to pay attention to the details and you have to be very thorough on what you're doing because this will clean you out, clean you out
Facts.
completely.
I'm only getting maybe like a 2R multiple, which is still positive, but it's not like fantastic. You know, I'm not super ecstatic about taking a 2R multiple, nor do I want to put a ton of size on for only a 2R multiple. If you're going to tell me, hey, I'm going to put $50,000 behind this specific trade to look to potentially gain $150,000, okay, fantastic, let's do it. Versus I'm going to put $50,000 to gain maybe $80,000. It's like it's kind of a turnoff, you know.
You've mentioned a few things that, so I want to gather some knowledge on how you think. So first of all, there's buzzwords like technical analysis, then there's obviously fundamental analysis, and then there's psychology. These are like the three big areas that people focus on, but also when something's not working, they look to blame. So they say, oh, their technicals might be shitty, but they're like, oh, it must be my psychology. And then they look to solve their psychology instead of their technicals. So I wanted to hear your balance in terms of percentages. All three are important, I guess, but how would you weigh them? Like, is technicals 50%, 80%? Is psychology 90%? How are you balancing those three main areas?
That's a great question. Honestly, that's an answer that is subjective to the individual because I've seen traders who just solely focus on fundamentals and do fantastic, right? Maybe technicals is 20%. And then I've seen the opposite and also do fantastic,
Yep.
right? I feel like there has to be a well balance. I feel like you do have to know like certain data that comes in the markets, such as CPI, what Jerome Powell's talking about, the Fed, interest rates, different things along those lines. I don't feel like you need to know exactly all of the intricate details on like macroeconomics, but at the same time, it's not going to hurt you. You know, so for me, if I were to put everything into a percentage, I would probably say I like to rely mainly on technicals, so I would probably put technicals at like the 50%, and then you have psychology and then fundamentals. I would put psychology a little bit more, maybe 30%, and then the rest would be fundamentals. Is
Okay.
kind of how I would weigh things because sure, like you can have um an amazing system in terms of like technical analysis, and it kind of varies too because like you could just completely put all of your blame, and I feel like people like to use the excuse of psychology like a lot, right? When their system just isn't maybe as great as they would like it to be, because you can have a system that wins 50% of the time at a 2R multiple, and you could still lose like 6, 7 trades in a row and still fall into that 50% probability, right? Versus somebody who has a system that has a little bit of a higher win rate, it's going to be a lot easier for you to manage that
Yeah.
psychologically, you know. So that's kind of how I would put it on a
Do you do a lot of work on yourself or spend a lot of effort and time on psychology, or is it something that came naturally over the years? Or did you set out and say, I need to work on my psychology? And what did you do if you did?
There was a period of time where I was like, okay, I need to focus on my psychology. But then also like I feel like early on in trading, I didn't really realize like a lot of the things that are a little bit more subliminal. So for me, for example, it's like, yeah, I know I could lose a trade and still be good, but I never really believed that I could lose that specific trade. So it's like, damn, what did I do wrong in this trade? When it's like, I didn't do anything wrong. I followed my system A through Z, and the probabilities just weren't there. And I feel like that's what a lot of people have. It's kind of like that facade of, yeah, they know they could lose a trade, but it may not happen to them. And in that specific trade that you put all of the size you wanted to win, and you could still lose that trade. So the way I like to view the markets is you're going to have an edge in the markets if you have a positive system with a positive expectancy, right? It's the same exact way the casinos make money in the long run.
They have
At the
rules
roulette
in their
table,
favor. Yeah.
roulette isn't 50-50. The casino has that 2% edge, but that 2% edge over who knows how many hands, the casino's going to win.
Yep.
The casino's going to win. So you just have to survive the losing streaks. And you know, there's so many different people that'll tell you like, okay, you know what, you can only risk 1%, you can only risk 2%, you can only risk 0.5%. And other people are like absolute like degenerates, like, okay, I'm going like 30% risk, 40% risk on a trade. So it's like, as long as you can survive those losing streaks and you have a positive R multiple, you will do well in the long run. That's really the way I view trading.
I got a question on what you just said. So me and Umar have had some debates challenging each other on that topic, which is how to react to situations of risk management, where if you have certain setups and you know they are in your favor, let's say it's an 80% setup, you should probably double down on it and increase your risk. And then other setups, you know, they're not as good, they're a 50%, 40% setup, but you're playing the risk reward, then you lower your risk. And that was Umar's position. And he was also, I think he likes his growth at the end of the year to be exponential. So whatever he gains in the first few months, towards the end of the year, he wants to increase his risk to kind of end up really high. Whereas I've just been very comfortable in just a linear approach, just consistent risk. The reason I thought of that was if I say I like this trade more and I think it should do better, and then it's just one of those times it was a loss, which happens, then I lost more than I should have because of how I felt. And vice versa. Let's say this trade that I thought is not a good setup, so I'm going to reduce my risk. It plays out in my favor. Now I didn't make as much money as I thought. So I've just sworn to just never modify my risk. And then Umar was like, okay, but then how you plan to scale and so forth. So I wanted to hear your thoughts on that topic of changing your risk management based on how you feel, based on a winning streak, losing streak, based on the setup itself.
Yeah, I feel like that's perfectly fine, to be honest with you. I'm a little bit more on Umar's side of things. I like to really leverage my profit inside of the account as much as I possibly can to make more money, because I feel like that's where like you see like a ton of growth financially when it comes to the markets, right? But when it comes to like profitability, as long as you're profitable, I feel like that's ultimately what the end goal is. It doesn't matter if your equity curve looks like a straight just skyrocket up, or if it just
How do you feel about that? Like, so basically, he says I'm kind of like on his approach, the linear approach of kind of never really changing anything and kind of keeping everything consistent with it. And how do you feel about that? Are you more of the exponential, like kind of use your profits to leverage it and make more, or how do you go about it?
I think I go through seasons. I think I go through seasons because there's times where I just on a good streak, the market is working in my favor, and I'm using my profits to leverage to make a significant amount more. But there's other times too where, you know, I might get in the market late, I'm not too comfortable, or I already made enough money to where that was my goal for the month or whatever, and then I'll just kind of keep maintaining. Or maybe there's something I want to buy, so that's my goal, so I'm going to try to leverage more to hit that target. It just really depends, and I kind of go through seasons. Right now, where I'm currently at is like I made my big pot already by kind of finding that good entry and holding it all the way through and made that significant profit to get me to where I want it for the month. And now I'm just doing 50 points here, 100 points there, and just making profits. And it's, you know, it for me, it kind of just adds up the same way. It kind of just depends on the time and everything on where I'm currently at, if that makes sense.
Right. I get you.
But you're just linear all the way through?
Yeah. I felt like what works with me, at least, it helps me, my personality, right? It keeps me not emotional, like just how he was explaining. Like every time I think this trade is the one, and I end up upping my risk, I end up losing. And every time I say this trade's mediocre, it's whatever, and I want to lower my risk, that one ends up hitting. So in order for me not to play with my emotions, I just keep everything. I keep everything the same. I risk my 1 to 3. I risk my 1% to make 3%, and I just keep everything the same because I know in the long term, my risk reward will outweigh all the BS. You know.
You know, it's crazy because there's no right or wrong way of doing it. The name of the game is to make money, and it doesn't matter how you're doing it as long as you're getting to it. So if it works, why change?
Right.
Is a lot more linear, and you see a little bit more steady growth. It's ultimately we both have the same end goal. So for me personally, I really like to really put in good size when it comes to specific setups, and really it's just acknowledging the risk. And okay, well, you know, if I have $500,000 in a trading account, is this specific trade really potentially worth me losing, I don't know, 25 grand on this specific trade, maybe 50 grand. It really just depends. I analyze that risk. I look at the potential R multiple and it's like, yes, okay, I'll pull the trigger. And if I take the loss, then it
That's
is what it
exactly
is,
how I
you
see
know?
it.
That's one thing that I've become really good at over the last few years is it is what it is. It's a loss. I already accepted it before.
It is what
happened.
it is.
Let's move on.
Do you look at the when you
It's
get to the
right.
bigger accounts?
Yeah.
I've been getting
Do
good
you
at
look
that
at the
too.
dollar amount, or do you just look at the R multiple, the risk reward, and the percentages, or do you actually think this is 50k on a trade? And do you feel it's like if I'm putting 100k, 50k on a trade, regardless if that's risk management and it's following the plan, it's still a lot of money. Does that feeling get easier, or you have to just kind of ignore the dollar amount?
The unfortunate thing about trading over the last few years, it really has desensitized me to money. And I went through this period where I would compare myself to like a lot of other individuals and other people who are really wealthy, and it's like 50k, it's like it's nothing. Like really, what is it going to cover? It could cover this, and that. But then at the same time, like as I'm maturing now too, it's like I'm learning to respect the dollar amount more. So when it comes to like having like those bigger trading accounts, for me, I don't look at it from like a risk percentage anymore. I really look at it from a dollar amount and what I'm comfortable losing. And then like overall, like if I were to continue on a losing streak, how am I going to manage that and how am I going to recuperate from that? So if I have $500,000 in a trading account and I feel like it's fine for me to put $50,000 into a trade, it really needs to be a just reason why. It's because I'm going to be looking to gain maybe 150, 200,000. And then I have to analyze, okay, well, am I ready to go through these P&L swings? Because before maybe like 2 years ago, when the Fed was just raising rates like crazy, inflation was super high and the markets were dumping, easy. Super easy because price would just go in my favor almost right away. And when I see green almost right away and I'm already up like a 2-3 hour multiple, I can manage that trade no problem. But nowadays, since the markets are a little bit slower, it's kind of like, okay, well, I don't really want to see the fluctuation in P&L where it's like, okay,
See, he's
well,
talking about the
now I'm up
seasons.
25,000, now I'm in drawdown 10,
Right,
15.
right.
Now I'm up 30, now I'm break even. So it's a little bit tougher. And as these market conditions change and as I evolve as an individual, it has been a lot harder for me to put on that same exact size, but I'm working right now towards getting back to that goal. So for me, really, it just comes down to like an R multiple standpoint and how can I recuperate from that potential loss? What's my game plan after that potential loss? If it happens, like I always have to analyze, okay, well, if I do take that big loss, right? First, I have to analyze how much profit I'm even in because if you're telling me if that's like a $500,000 like deposit into that account, there's no way I'm wishing 50 grand. It's impossible. If I'm up maybe $200,000 and it was like a $300,000 deposit, it's like, okay, well, yeah, sure, I could lose $50,000 on this trade, but I still have $150,000 of realized profit, right? So I could still recuperate from that no problem and not even go near my initial. So that's the way I'll
It
analyze it.
seems like you're not a trader that likes to have one big account and you trade it indefinitely. Rather, you load up an account and use it for a while and then load up another account. Is that your system? So I'm not that guy that is going to sell out and throw the audio performance. No, it's putting somewhere and probably.
For me, it's like, okay, well, I'll look
Sorry,
at my
bro.
performance in that month. Or
We
not
ain't
even,
doing no
like,
sponsors here.
It'll really just depend. Like, I feel like I have a very dynamic system when it comes to like withdrawals and deposits, right? So there'll be times where I'll go in and I'll start a month off with like 100 grand and I'll consistently withdraw every single week and then I'll pull all the money out and then just kind of chill for a little bit and then I'll go back in with another 100 grand and just continue to do that process. Like, I'm just trying to like literally trade and just withdraw all of the profits. I'm not really like a huge guy on compounding the money inside of my trading account because again, like I'm not really looking for like that long linear growth. For that, I'll invest monthly into the S&P 500 where I'll get that long linear growth or invest into what is it called? I'm starting to open up like a life insurance where essentially they invest the money into the S&P 500 for you, but you're capped at like I think it was like an 8 or 10% yearly growth. So in the year, if the S&P 500 goes up to like 15% in gain, then the insurance policy will capitalize off of the difference or whatever it is, and I take no losses. You know, it's a lot safer. That's a lot safer.
Real quick, I want to talk about this real quick. Now that I've hit a new pinnacle within trading and financially, I look a lot more into tax benefits. Trust me, that's a clean way of really, deducting his capital gains so he can offset his taxes, putting into life insurance and then just taking loans against it.
Right. Yeah. I've
Taking
been hearing
losses,
stuff like
insurance company is
that.
the one that'll take the loss, right? So for me, when it comes to trading, a lot of the objectives that I have inside the markets is, okay, well, I need to make this type of money to pay for either this or to have the money for this type of investment. That's basically what I did with my house as well.
So you use trading as more cash flow and lifestyle, and then investments for wealth. That's how you use it.
Basically.
And then are you
Now I have
taking
different trading accounts for different purposes?
Okay, literally purposes like, okay, I want to buy this car. Let me load up an account for this car. You itemize it almost.
Yeah, and then depending on the value will determine how much I put into the account. And then on top of that, it'll also like, because I'll have like a time frame of what I want to do because I'm not trying to flip accounts, right? I know flipping accounts is like a super dangerous thing to go into. and I'm just like consistently just withdrawing out of the account, sometimes weekly, depending on the profits. Like if I put 100 grand to account, I'm up $30,000 at the end of the week. I'm taking out at least 15, and then continuing to go from
Do
there.
you find it? I mean, also another thing was how often are you managing like a bunch of accounts at the same time, or maybe just completely off and not in the markets?
Like 2 or 3 accounts, roughly around the same
Okay.
time, different purposes. You know, some accounts I trade CFDs, so I'll trade SPX 500, NAS 100, US 30. Then other accounts I'll trade futures like ES, NQ,
Okay.
not YM. And then I mean, very rarely will I look at like forex anymore.
Oh, yeah.
You know, different things like I don't trade forex anymore.
Are you
different things along
transitioning
those
more
lines.
towards futures based on the
Futures and
situation?
indices? Yeah,
Is that
futures and
because of
indices.
what's going on in the US or any other reason?
Not necessarily. I find that it's a more volatile market compared to forex, and for me and my system, I'm able to really get a lot larger of an R multiple in a shorter time frame compared to when I was actually trading forex. Like for me to gain like a 3-4 hour multiple when I was trading forex would take probably a few hours, versus in futures or indices it would take maybe 15 minutes an hour. Like I had one huge trading day 2 weeks ago. I had a $54,000 day, which is funny because I posted the breakdown on YouTube today. In the morning, I ended up trading. This was during Powell's testimony, and I ended up catching a long position on ES. I was risking $6,000 and I
Powell.
gained like $30,000 on that position, like $32,000 on that position. It was a huge R multiple, it was like a 5 R multiple. I came back in the afternoon and then caught a huge dump on a short, which was my planned R multiple. I was risking like $4,500. My planned R multiple was a 4-to-1, which I was looking to gain like $15,000, and I ended up making like $25,000. It was a $54,000 day. When you combine the trading, my second trade of the day took maybe 10 minutes, and the first trade of the day took about 50 minutes or so, and I was able to capitalize off of a 10 hour multiple in a single day with a roughly an hour and a half trading day. Well, trading day.
Yeah, a few hours, if anything. This is another topic that is widely contested, and I want to hear your thoughts on it, of more like lower time frames, scalping or intra-session, intraday, which seems like you are, versus just swing trading. And there is multiple things to mention on it. And I've had both sides of the spectrum on the show, where the swing traders are like, no, you got to use your fundamentals because that's what's moved the market. So if you're using your lower time frames, you're just lost in the noise. Fundamentals what moves. Use your higher time frames. You don't have to deal with the chaotic volatility, and you're just stable. But then there's the other side, which is, as you were mentioning earlier, the psychology. Can you sit through 3 weeks of consolidation at your entry and not exit? Or let's say you're in profit 3R and then it does a 2-week retracement, which is normal. Can you hold yourself through that? But then there's the other side of the pros and cons of the lower time frame, which it seems like you're more involved with.
Yeah.
Why have you chosen? Would you call yourself a scalper, or how do you define your way?
I have my different systems.
Okay.
So like my bounce plays, I know are a little bit more intraday.
Okay.
And my breakout setups are definitely way more scalping. They're definitely way more scalping plays. But my viewpoint on that essentially is, if you are swing trading, I do agree you do need to be aware of your fundamentals, because anything that happens in the world or anything when it comes to like economic data will 100% affect the outcome of your trade. You can't solely rely off of technicals if you're holding a trade for a few days or a few weeks on end. You're only going to be crippling yourself by solely focusing on technicals, in my personal opinion. If you're swing trading, like you're looking for not little moves in the markets. You're not looking for a small, like call it when you trade Forex, right? You're probably risking like 100 pips to gain 300-400 pips on a big swing trade, right? Versus
That's
in
huge.
indices, futures, whatever you want to call it, you know, you're risking maybe 20-30 points to gain 50-60 points. Like that's normal movement in the markets every single day. So for me, when it comes to looking at that viewpoint, and I used to actually really try and focusing on swing trades, but then a lot of the times I find, why did I randomly get stopped out? Like price action was dumping in my favor, and then after 2 days, a huge big candlestick like this just came up out of nowhere. So you do have to be fundamentally aware if you're swing trading, versus if you're scalping, day trading. I would say like you can most definitely get away with just relying on
This topic I've
Swing
seen on
trading
for
is
an
about
hour,
reversals.
because there's so many unknowns in the swing trading market,
Yeah.
where you might have
So
made
many
a
different
sound
variables.
decision,
Emotional.
yeah, and then some news event comes out 3 weeks later that just changes everything you thought
100%.
based on the information you had. So there's a lot to say on it, but the analogy I like to give for traders is, you know, those guys in the circus that spin plates, and you got to kind of balance all the plates at once. So
Yeah.
that's what trading is, I think. And what
Yeah.
people do is they just focus on one plate to keep spinning it, and all the other plates come crashing.
Yep.
So what I've tried to visualize for myself and help others is, you got to know what your plates are and spin them all. And it's not a goal of just spinning one. You got to balance them all, otherwise you will have an effect of them crashing.
100%.
So when I kind of think, what are those plates, is your risk management, your risk to reward, your win rates, your trade duration, trade frequency, how often you can get in a trade, amongst others. So if you were to design the ultimate trading system, or your system, let's say, and you're balancing a few things, for example, if I put a gun to your head and say you need to make an 80% win rate trade portfolio,
time
you could.
frames.
But you'd just be very selective. You'd wait for your 5-star setup. You'd wait for that. Maybe you wait 2, 3, 4 weeks. But eventually, when it comes, you'll take it.
Yeah.
So you will get a high win rate. You can do it, but your trade frequency is low. You have to be selective. So then the solution can be, if your trade
that's
frequency is
fact.
low, is trade more things. And people say, okay, now I'm going to trade currency, and then I'm going to trade futures and trade this and trade that.
Then there's so many different variables
Yeah, so
that
that's
you
why
have
it
to think
becomes
about.
you got to balance everything.
Yeah, it's
And
just
then it's
like,
like, okay, well, let's say I want to find out quick if I'm right or wrong, which is, it seems
Yo,
like something
pause
you
it real
value.
quick.
So that means that let me jump into the lower time.
Yeah, exactly what they're talking about the different variables. I felt like I feel like lowering my variables has changed my trading significantly. I feel like since I switched to doing one trade a day, risking a one to make three, my win rate has gotten a lot higher, and I end up stopping myself from doing foolish things in the market, right? Because I used to be the person like, oh, okay, maybe I'll do 2 to 3 trades a day, and the variables will always change and nothing was ever consistent. And I'll find myself in these emotional crunches that I just couldn't escape. Like I would lose 2 trades in a row, and then that would linger through the whole day for me. Like I'll be so angry, and I think trading is a personality thing. So when I find myself losing 1 trade a day, I can go on by my day. I feel okay. Um, I could just continue on and not really focus on that. But bro, taking multiple trades and having variables that are changing every day, like for me, it was just too emotional. How you feel about that?
I know, I agree. I mean, trading is about finding yourself, and
Right.
like you said, you're like, I can control myself best when I place one trade, just looking for the best trade, and I take that one shot, and that one shot is either gonna hit or it's not, and I move on. It is what it is. I'm kind of the same way too, but it kind of goes back to how Raul was saying. It just depends on how I play my numbers. This might be a fire trade, so I might risk a little more, or the trade might not be perfect, and I got things to do, so I'll use a smaller lot and then use a bigger stop, and I'll let the trade play out because at least with that bigger stop loss, I have time to close that break even, right? Because
Exactly.
my subconscious mind doesn't want to lose the trade. I much rather close everything at break even than actually lose a trade. So it kind of just depends. And like you said, trading is just about it's a truly based off a personality thing. So the fact that
Right.
you're already
Knowing
finding your
yourself.
flow, right? Everyone just needs to find their rhythm and their flow. And when it comes to mentors and stuff like that, you take bits and pieces off people and then you mimic those things. You don't just copy 100% the same path they take. And that's where
Exactly.
people
I
kind of
think
mess up.
that's where a lot of people. Yep, I was just about to say that. I think a lot of people mess up because they think, okay, well, I bought for example, I bought Raul's course and I'm doing exactly everything that he's doing and it's not working for me. Well, you don't know how Raul handles doing intraday trades. You might be more of a scalper, or you might want to hold longer, and it's based on, it's a personality thing. You have to go out here, buy a course, take some from him, go buy another course, take some from him. I think people are like scared because they bought a course and it supposedly didn't work, to invest in their knowledge.
Yeah. It's I mean it's a pay to play type of sport. It really is. I can't really agree on buying the courses because I never bought a course. I was too broke to
Right.
buy a course. I was trading $100 accounts. But the way I
Right.
did it was I had to put the legwork in and I did a bunch of YouTube. I did a bunch of
Well,
Instagram. I did screenshots. I back tested things that I saw. And eventually I even find like free courses online. Like I just did a
yeah,
bunch of legwork.
yeah, that right there is the same thing. Not necessarily that you have to pay somebody. It wouldn't matter if you pay somebody. You could pay somebody or not pay somebody. Whatever Wherever you're learning at, you could be learning for free on YouTube. You could be learning from your neighbor. I feel like you're like they can sit here and give you the whole rundown, and you'll still never trade like them, just because everybody's different. You might think this candle is this. I might think this candle is this. You might think the trade's gonna take off for a 1 to 6. I might think it's just gonna do a 1 to 2. So it's a personality thing, and I think a lot of people don't even stick around long enough to see their strategy play out in their favor.
I think that's the problem. We live in a generation where we live in a 30-second generation where you watch a video for 3 seconds, you get off. It's kind of like that with trading, where it's like, I tried this course, it didn't work. And it's like, to be honest with you, I wish I had money to buy a course because I know exactly whose course I would have bought. I know exactly whose courses I would have bought. It would have been more than one. And I wish I could have because it would have stopped me from making a lot of the mistakes that I know
Yeah.
now. But at the same time, too, people are just like, I want to close my trade within 30 seconds. It's like, okay, buddy, hopefully I'll see you in four
Right, right,
years. But
right.
yeah, it's just it's a personality game. It's a personality game.
for him. That's another play. Now you can go too extreme. You go too lower of a time frame.
Yeah.
You just become, in a trade for 10 minutes kind of thing. So
Yeah.
there's this sweet balancing act between all of these things. How would you navigate it for a newer trader? You have your system, and I'm starting to gauge how it kind of looks like with all these plates. But for a newcomer, would you say focus on the lower time frame to get the answer quick and learn quick, or would you say focus on the higher time frame, take your time, learn, and then work your way down? Let's balance all these plates. How would you do it for a newcomer?
The thing is, I feel like everybody's different. A lot of people really have like that fast thinking, so they're able to really adapt to the lower time frames very quickly. Now, of course, you have different time frames. You have the 1 minute, you have the 5 minute, you have the 3 minute, you have the 15, you have the 30. You need to find a balance in between how fast you're able to think and how fast you're able to execute on those decisions. Right? Some people may not be able to trade the 1 minute time frame that quickly. Like if you just hesitate 1 second, you've missed the move. And it's done,
Exactly.
right? But then at the same time, other people are like, bro, like I'm never trading on the lower time frames because like I hesitate too much, and I get people telling me that all the time. So for me, it's a whole trial and error thing. You got to try it out. If you feel like you're starting off and you feel like, you know what, maybe I don't want to trade the lower time frames just simply because I can't make the decisions on the fly like that. I need to take a little bit more time to analyze, and it's okay. Well, you can try the 30-minute time frame. You know, it's a nice balance in between the 5 minute, 15 minute, and of course the hour and the 4 hour time frame. But then some people too, when they go into the higher time frames, they have the expectation that price is going to go in my favor right away. But it's like a single candlesticks every 4 hours, you know, and then you have all these other variables to take into consideration, like how long, if you're trading if your candlestick closes every 4 hours, how long are you really going to be, how many times are you really going to be trading on one specific asset? And that goes into the other thing that you said, like now you have to take into consideration trading multiple different assets, and then you also have to take into consideration like what times do those assets have the most volume, and then what makes them move, right? And then so it's like if you're going to be trading forex and futures, then commodities, it's like, okay, well, you have to learn everything about all of those different markets and what possible economic data is going to affect those markets. And then
This is why I say pick one. Pick one, learn that one, and that's it. That's it.
Exactly.
You don't need to trade 4 or 5 or 6. Just pick one or two. That's it. That's all you need. Especially trying to trade NAS and then AUD or whatever. Like you're just messing yourself up.
what is going on in the world, that is going to affect those markets as well. Like for me, I have no business trading, let's call it the Aussie dollar, because I don't know what's going on in Australia. I don't know what the Australian inflation rate is at, you know, versus like maybe ES or NQ, you know. So me taking all those different things into consideration, I like to keep things as simple as I possibly can, because trading is already as difficult as it is. Why would I want to make it more difficult?
I say the
on
same
myself?
shit.
It's like, I guess people can kind of argue like, okay, well, like, you know, I have my system, right? I just follow my system, and whenever I see my system, I execute on it. It's like, yes, but again, like when it comes to swing trading, you have to take into consideration all those different variables, because you could be floating 3-4R on your swing trade that you've been holding for days. One thing comes out and then you're break even. That's it. The trade is gone. You've wasted 3-4 days, you know? So, I mean, for me, it's like, how would a newcomer come into the markets? Really, it's just trial and error, in my personal
Let's
opinion.
talk numbers. So what would you say is like because there's so many things online where you can get the super high risk to reward and so forth, or the super high win rate traders, and it's quite overwhelming for a newcomer. Like, what do I believe? What is realistic? What would you say is like a achievable, consistent risk to reward that someone should aim for?
2 to 1.
2 to 1,
I
okay.
think it's even a 1 to 1.
Oh yeah,
even a
meaning
1-to-1.
you'd need a high win rate.
That's what we were talking
Yeah,
about
you
yesterday,
deserve
bro.
it.
What do you think is like a very achievable long-term
Yeah.
win rate for someone to aim for?
Bro, super achievable is 50%. Super achievable is 50%. And with a 50% R multiple, you only need to win, again, at a 2R. For a 50% win rate, you only need a 2R multiple to be profitable in the long run. So it's like, that's super achievable. I wouldn't be the type of guy that's like, okay, I want an 80% win rate at a 5R multiple. Like, that's most likely not going to happen. Typically, what I've seen from my own personal results and other people's results that they've shown me, it's like, okay, well, if you have a higher win rate, you're going to have a lower R multiple, right? If you have a higher R multiple, you're typically going to have a lower win rate. So it's about finding that sweet spot that suits your personality.
That's something a breakthrough I had last year, or maybe the year before, where I thought a win rate was given to me. It was like like an athlete, your performance, how good you perform in the market is your win rate. Until I realized, no, it's totally in my control.
Yeah.
If I want a high win rate, I just pick better setups. If I want a low win rate, people think, well, why would you want a low win rate? It's because if I stick at the 90% win rate area, I'm taking a trade once a month. So I want to take trades more often and play the risk reward game. So then I allow myself to have a low win rate, but in a controlled way, so I can start to take counter trend setups or hedges and these kind of things. And you play your system. So the way I've developed it for me is like, I want to have my win rate 45 to 55. And when it's in there, I'm happy. If my win rate gets too low, stick to my A+ setups. If my win rate gets too high, okay, now I can start to bring in my counter trends and so forth. So I can play the risk reward game. So I keep that delicate dance going on. The next thing I wanted to ask is, you mentioned ICT and SMC. You've seen the rise of it in your time. It looks like you're not a user or advocate of it, but you can't deny it's there. And so many people talk about it. So many people use it, and so many people stand proud with it and say we are the best kind of thing. So what is your view on it, and have you spent much time studying it and maybe using some pieces of it?
I haven't spent much time looking at ICT. I love looking at trading content and how other traders trade, right? I look at Umar, Carmine, Jay Dunn, Rake. Who else? I mean, you have Q. I look at every one of their videos just to get a perspective on how they view the markets and how they trade. Jade Cap, I haven't really looked at Paladin's videos too much, but I do spend like a good.
Yeah, bro. It's just like what I'm saying. Just pay attention to everybody and kind of just pick and choose what. I love this video. Holy shit, bro. Like, I agree with everything this man is saying. Like,
Right.
amount of my time literally looking
My
at
bad to
just
keep
trading
pausing
content
it.
to see how they're trading and how they're making
Very
money
good.
inside of the markets, right? I've seen a few ICT videos. Like I'll be scrolling through Instagram on my Instagram reels, and then this one trader's talking about, okay, yeah, we have a change of character here, fair value gap, and this and that. And I'm like, okay, it's interesting. I wouldn't say like I'm against it, because for me, I don't care how you make money in the markets. You could be trading trend lines for all I care personally, right? If you're making money, great, fantastic. It's on you. It doesn't affect me at all. The thing is, like, I don't know, because there's ICT traders that talk bad about ICT, talking about how he can't.
Yeah, I
physically
seen that
trade,
on Twitter.
Where
I mean, there's a
quite
lot of
interesting.
expose documentaries on
Yeah.
the man himself, but
Yeah.
the traders I've spoken to, they're kind of like, ignore the man and just look at the concepts, because he can say what everyone does, what he wants. He might have his own ego, but they're like, the concepts work for me. And when I've started to speak to a lot of the guys, what I find interesting is on Twitter, when I see an ICT trader, they're trading EU. One of them will be buying, another one will be selling the same price action at the same day. It's like, well, that's not a strategy then. How can you have two people that trade the same thing doing the opposite? And when I looked into it, I was like, basically, it's a catalog of confluences. You just have so many things you can trade and look
everybody
at
has
it.
different eyes.
And yes, and everybody combines it in a different way, and maybe by design. Maybe ICT wants it to be super broad, so that it's just law of averages. If you have 1 million people trading your way, you'll always have 1,000 people that crush it just by probability.
Of
So
course.
you don't want to give them a super narrow way of trading, because then it becomes harder to have that probabilistic thing. And what I've noticed is a few of the names that you mentioned that are ICT traders, they just pieced it together in a better way.
And
So
I feel like they added their own.
Probably, yes.
I don't feel like they all have they all trade exactly the same. I feel like they've added their own things. They've changed it up a bit to their liking essentially, and they found their results through that.
Yep.
I don't feel like any ICT trader, like you can grab like maybe 5 or 6 of them, put them in the same room, and they're probably gonna take different trades on the same day on the same exact pair, whatever they're
asset,
trading.
yeah.
You know, the thing is too, like, yeah, I have seen that, which is quite interesting to see, because clearly, I mean, these guys have made money, like Jade Cap, ton of ICT traders, Paladin as well. Like they've made money in the markets, and it's like, okay, well, maybe ICT can't trade, but he could teach how to trade, which is quite an interesting concept that I saw as well.
when it comes to that, what I kind of deduce is that it's not the strategy, it's the person. That's pretty important.
Yeah,
Another thing is the strategy
agree.
can only take you so far. It's
Definitely.
then doing the reps and
Yes, the
refining
person.
yourself and finding your way. But I do believe there's common denominators where there's certain strategies that will just always be harder. You'll just find it less likely to be profitable if you're trading a very rudimentary, basic way. But then there's certain strategies that are just easier because you're following a better concept. So if you were to kind of say to a new trader, these are the best things to focus on. Like there's so many concepts to learn. Focus on these 2 or 3 things, and you'll be well along the way. What would you say those few things are from a technical base?
From a technical standpoint, honestly, I would just really be focusing on price action. That's one, and then focusing a lot on supply and demand. I'm really big on supply and demand and key levels, and really just focusing on like the probabilities of price action and what happens at these specific key levels. Because you could just kind of go back over the last 6 months worth of data, analyze that data, and see what.
honestly, bro, it's crazy. He makes it, the terms that he's using is the proper terms. But I literally trade that. You know what I mean? That's what I trade: price action, like quarter points or Fibonacci points, and supply and demand.
Yeah.
You know what I mean? I just look for those levels and those zones. I call it zone and zone fib trading, bro.
Yeah, definitely. I guess we just call it different things. Yeah, that's exactly what I do.
And that's what, with ICT, they trade probably the same shit that I do. I never looked into it, but they just have their own order
I
blocks.
took a
It's
little
literally
look
like
into it. Yeah, I took a little look into it, and I think they just bro, I think it's the exact thing that we're doing. It's just they're renaming it and rebranding it. It's kind of like acting like you get a Gatorade bottle and you take the label off and put
Prime,
secret sauce on it or whatever, and you just rebranding it, you know?
Gatorade to Prime.
Right, Prime. Yeah, it's like the same shit, bro.
Price action does at these key levels. One thing that I'm actually doing right now, and I've been studying for the last few months a lot, is order flow, because I'm just always looking for a way to increase the edge that I have in the markets and implementing order flow into my trading with the same setups. I'm not changing the setups that I'm taking. I'm not trading my entries. All I'm simply doing is increasing the edge in the markets by implementing order flow.
The biggest breakthrough I had 2023 was modifying how I took profit, and I'll explain a little bit. So what I found was when I was taking trades, I had my desired outcome, which you've kind of mentioned, what I expect the trade to do if it goes in my favor. And we all know that the market doesn't always do what you want. So what I realized is certain of my trades, let's say I targeted here, it went beyond. So I cut it too early. Those other trades that went all the way to my target and then reverse. Perfect. Certain trades went 80%, 50% there, 30% there. When I plotted it, tracked it, and looked at it over hundreds of trades, what I realized is it's kind of like a bell curve where certain trades just go a few pips in profit and reverse. Maybe it's just a loss. Certain trades go like 30% of the way and break even. You didn't take anything. Certain trades go all the way and beyond. So when I started to look at that, but I was always taking those trades based on what I thought, taking profit on what I thought. So based on key levels, market structure, the next supply demand zone, these kind of things. And that's how I used to trade for my first 6 years of trading. And then I switched it. I was like, okay, based on the data that I've plotted, let me take partials where it's optimal for my system.
Yeah.
So what I thought was best was let me get the most out of each trade. So the most out of each trade means hold as long as possible. And taking partials, you always regret it. Like, oh, if only I held full volume, I would have had this. And that was the thought I had in my head. And then I started to know, let me just take a partial like here and here based on my data. So what it ended up for me, I trade a little bit higher risk reward and a lower time frame. So at a 1 to 10, I'd cap my trade. I'd never hold a trade beyond that. And that wasn't often. That was a very good trade, but it's not 50% of my wins. And then the other trades, I'll just cap it at 1 to 3. And I'm trading like a 5 to 7 pip stop loss. So for me to get a 1 to 3 is just the London session volatility, 20, 30 pips, which can happen in a good London session. So what I realized was
That's exactly
I was
how I
taking
am.
trades that were going in my favor and then maybe reversed on me. And I didn't hit my TP2, but I locked in a partial. And I locked in a partial. And there were certain weeks where I got it all wrong. I thought price was going to do this, that, and the other. And didn't do anything I wanted, but I locked in these partials. So at the end of the week, I was wrong all week, but I accumulated small partials along the way. For me, then I realized, well, to be a good trader, you don't need to necessarily be the best analyst. You just need to be good at managing your money. And then obviously, if you're a good trader on top of that, it makes it a lot better. And that for me was only through data. I couldn't have like imagined that. I couldn't have just figured it out. It was I had to look at the data and see, okay, my optimal place was 1 to 3 and 1 to 10 based on the way I look at it. So then I realized I've increased my profitability by capitalizing on trades that, let's say, go to 50% of my target and then reverse. I used to just say, oh, well, break even. I didn't lose money. And then so I realized, no, that's money I left on the table. And at the end of the month, that could add up 1 to 3, 1 to 4, 1 to 10. It adds up.
I want to pause this, go back on the topic again. Details. He's not lazy. He's figuring out what works for him and what doesn't. He's not lazy. He's doing the proper steps to become a good trader. And this is what I preach all the time in the Discord and to everyone else. It's where it's like, stop being lazy. Do what needs to be done. You wake up in the morning, you place a trade, and you're like, oh, I lost. Oh, well. It's like, no, figure out what the issues are. Right?
Exactly.
And how can you correct
Figure
that?
out if it was an entry. Oh, did you have a bad entry? Did you check all your confluences? How was your risk reward? Did you over leverage? People don't sit and analyze what they did wrong. They only like to look at a trade when it goes right. When actually you should be checking when it goes right and when it goes wrong. You got to really dig in and see what's going on with your strategy. And over time, you will notice. Like I was never a person to actually journal, but I always took kind of like this mental note. I'm like, okay, wait, I showed up at 9 p.m. AUD started moving at this time. Okay, I showed at 9 p.m. again. AUD started moving. And then I started recognizing patterns in the market. A lot of people don't even stick around to see the pattern in their memory. So if you don't stick around, how do you expect to have consistency in the market? You know what I'm saying?
Yeah. You got to be thorough all the way through.
So when I just changed my system to just take partials in that way, I didn't have to change my edge, didn't have to change my psychology, didn't have to change my win rate, didn't have to change anything.
Straight management.
Just better management, and my profitability significantly changed.
You see that?
So I want to
All
hear
it
your
took was
thoughts
risk
on that kind
management.
of topic of risk management, which we touched upon, and profit taking. How have you optimized it for yourself to make sure not necessarily getting the most out of each trade, but getting the most out of your whole system at the end of the year, let's say?
Yeah. So for me, when it comes to my trading management, of course, it came down to refining. It's almost a very similar process to what you went through, except I know for my specific setups, like my breakout setups, I know that at some point this trade is probably going to come back reverse against me. It's not like I'm looking for like a huge, massive move to the downside. I know my average target on a breakout setup is probably about like a 1 to 1.5 hour multiple, maybe a 2 to 1 hour multiple if it's a session with good volume in it. So I know at a 1 to 1, all right, this is my trade management. I have to move my stops to break even. At a 2 to 1, that's when I'll close out the entire position. So then when it comes over to my bounce plays, essentially where I'm looking for bounces off of key levels, once I have all the confirmations, and then again, like implementing order flow and different things, because nowadays it's a little bit different with order flow, right? But when it comes to those setups, I know they're a little bit of a longer term setup, so I can't move my R multiple, or I can't move my stop loss to break even at a 1 to 1 R multiple because I need to give the trade a little bit more room to breathe. But what I do find is I need to consistently move my stop loss in the direction of price action when price action is starting to go in my favor. So every R multiple that I am up that is unrealized, I will continue to move my stop loss down because I don't want the trade to come back at any point because I was having a lot of break even trades and unnecessary losses. Like you said, like 50% of the time, price action would go to the 2 R multiple and then come completely back against me and hit me out and stop me out at break even. So it's like, okay, well, for my breakout setups, I'm not targeting 4 or 5 R multiple anymore, looking for like this massive move because the stop is tiny and it's small. I'm just simply looking to gain my 2R multiple based off of the statistics that the data has shown me, and that's it. Right now, there are going to be times where I do hold for longer because just volume is absolutely it's there and it's fantastic, and those are like great trades, right? But I don't strive for that anymore. I literally just follow the system itself and say, okay, well, taking a breakout setup today, I'm looking for that 2 hour multiple, quick scalp in and out. Like literally before I came here, I took that and it was like a 10-minute trade and it was a 2 hour multiple, and call it a day, you know, versus before it's kind of like, okay, well, I already made money, I want to get back in the market, going to look for another setup. And then on top of that, it's like, okay, well, if I would have continued to hold that same setup that I took today, price action would have came and stopped me out versus me actually securing profits. There's been so many trades where I've been just married to like that home run in the big R multiple, that price comes all the way back against me. I either break even or take a loss.
And that's inefficiency in a system. Yeah. I do remember a couple years back, I think you were the first person to reach 100K on FTMO. You're correct in saying that. So talk to me about that journey of being like not only just the milestone, but actually taking that huge amount to pay out with prop firms specifically. And now, because majority of traders are probably prop firm only traders, navigating a system for prop firms, if there's any difference compared to personal capital in the way you do it.
Yeah. So for me, when I had kind of set out to do that whole prop firm thing, I was trading for prop firms. And I was like, one of my students actually brought it up to me. And I was like, this is a thing? Like what? I didn't know about this, right? And he was like, yeah, you got to check out FTMO. You can trade up to like 300K. And I check it out. And I'm like, is this real? No way. So I try it out. I go through the whole process and I get like a 15K payout. And when I see the 15K actually hit my checking account, I'm like, wow, this is crazy, right? And then on top of that, it's like, I'm already trading my own capital. Like, I'm good. I can just continue to do this. Like, why am I going to pay a different company when I already have the money in my account? And it's like, at that time, a bunch of people are like, oh, no, you know, his trades are fake, blah, 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 this and that. He's not a real trader. It's like, okay, well, if I show him I can do this evaluation with this super strict tiny drawdown, first of all, 10%, then you have a 5% max daily loss, and I'm able to actually make money on this. Like it's almost undoubtable, right? Like that just doesn't happen with luck. And I set that goal out for myself. I got a few payouts, like 30,000, 40,000, and then came the big $100,000 payout. So previously, before that payout, I had gotten a $45,000 payout, and then in that specific month following, I had basically a $300,000 account, and there was a max profit split of 70%. At that time, this was a few years ago. I think this was like 2020 or 2021. Right, I think it was 2021, and they had 70% profit at that time. I had taken the account from 300,000 all the way up to $174,000, which I have the actual link on my website.
Pause that real quick. I want to talk on this. This was like 2021, I think, like what he's talking about. I was actually in his signal room during this time, and when I tell you, this man was on fire. Like, he was trading gold. I think he was trading gold only. This man was on fire. Y'all don't understand the amount of heat. Like, this was during a time like I was cutting my trade short. Like, I think I was doing like 1 to 2s, 1 to 3s. Man, his targets were hitting for like 1 to 5, 1 to 6. Like, I'm talking about everybody was going crazy. Like, during that time, man, it was like, that's why I won't ever doubt Raul and his skills, no matter what I see online, because I seen it with my own eyes. I seen this man with a 300, I think it was like a 300K, yeah, like he said, and he was actually up like 100K, and then like I think the next week, I think he took it to like 154, I think it was, and then he got his payout. And I think he went and got a Lamborghini Urus, like he put the down payment on it. And it was just amazing to see, because anybody who takes these prop firm challenges, you know how difficult it is to kind of like maintain. And when you're at a high, like such high profit target, like how he was, like, man, y'all know the feeling, man. Like when you're deciding if I should take this payout or should I keep pushing the account. And to see him actually keep pushing the account was just amazing. You know what I'm saying?
Yeah. You know, I've always been a fan of Raul and Q. There always been two people that I looked up to in the industry when I was getting my feet wet, and even to this point, I still keep in touch with what they're doing. I'm surprised that this video got taken down, because this is a good video. You can tell he's an excellent trader by just the way he explains himself. He knows how to communicate and talk about the sport, because you can tell he loves the craft. And that's very important when it comes to this industry. And I know he probably gets a lot of flag because he sells courses or whatever the case may be, or he's the top dog. And when you're at the top, you get the most hate, whatever the case may be. But I could say for myself, I'm an excellent trader. And Raul has the sauce. I've seen other top influencers, and I'm just like, I don't know about that. But Raul it wasn't someone I ever questioned. You know what I mean? He just has the magic touch to the marketing, but also to to the trading. And you know what I mean? But I do remember
Right.
when the news came out that someone finally hit the 100K mark. It was a big turning point in the industry.
Definitely. It was impactful.
You know what it kind of reminds me of is, you know, that movie Ready Player One with
Yeah, I think so. Yeah.
with the VR, and is
The
when the
VR headset. Yeah, yeah,
yeah,
yep.
the guy passed away. He's like, there's a bunch of Easter eggs everywhere, and the guy hit the leaderboard first. It was kind of like everyone's trying to find the
Right.
next Easter egg, and everyone's trying to hit that 100K. And I think there's only been a few
Right.
people that hit that mark since.
Yeah, I think a lot of people don't give Raul his props because, to be honest, at least from my understanding, I feel like Raul put at least down south, Florida with FTMO. I think he put that on the map. I didn't hear about prop firms before Raul took it, and maybe because I was a student of his, but I have never heard of prop firms. And I think he dropped it in the Discord, I think it was, and he was like, "Hey guys, you might want to check out FTMO. I just got a payout. I think his first account was like a 100K account, and I think he got a small payout, and that was just a goal, and I went and got funded with FTMO and got a little payout, and I was like, oh snap! Like when the money hits your bank, it's like, wait a minute, like this is real. Like it was a real turning point because coming in the game, we had to deposit our own money. Like prop firms was the game changer. Like when you deposit your whole money from like whatever you did, like you worked or whatever, and because the thing back in the days was you flip an account, right? That was the name of the game. You flip an account, try to grow like a huge account, and hopefully one day you have a big account. Man, prop firms changed the space, and I think a lot of people don't give Raul that credit because him doing that 100K on the FTMO kind of put eyes on the prop firm space, you know?
I agree. Now that you're talking about it and thinking about it, I think I knew about profit. All that around that era is a little blurry to me, just because I was just losing so much. I was in a bad place, but I think
Right, right.
around that time is when I did hear about prop firms, and I remember him getting that. And I wasn't as skeptical anymore. I'm like, oh wow, they're actually paying out that significant amount of money. I didn't go with
Right.
FTMO though. I went with Funding Talent for a reason. I think they had cheaper prices or
Oh,
whatever the
yeah?
case may be. But I do remember around that time, I wasn't as skeptical to take a challenge. So instead of putting 500 into my personal account, I decided to buy a challenge account. But it was around that time. I think he did put, the prop industry to the next level that it was supposed to go. Yeah, it's kind of
Definitely.
crazy to think about. I never, yeah.
$1,000, and then I hit a drawdown where I ended up cashing out at around $150,000, and then essentially I had made over 50% without even coming close to the 5% drawdown, and it was like 4% that I
Yep.
lost at most in a day, I believe. And you can't just do that out of luck. That
Mm.
shows actual skill. And I wish now that they would have had the 90% then, because
Yeah,
it would have been
makes
a
a
lot
difference.
bigger of a
Yeah.
payout. It would have made a huge difference. But not only did I do that to prove my own skill to other people and show other people that it's possible, but it was also to motivate other people, because it's like, bro, I spent $2,500 on that
The risk reward on
challenge.
the actual opportunity.
It's huge.
Yeah, exactly.
Because on that
Huge.
account, I had spent $2,500 for the 300K. Took the time and effort. All it did was leverage my knowledge, right? And I was able to capitalize, I think, almost close to like a total of around like $180,000 in the span of
Yeah, it's
8
crazy.
weeks.
Yeah.
In 8 weeks, so I turned $2,500 into almost $180,000 in 8 weeks. Not even, because I got the $2,500 back.
Yeah, exactly.
So not only does that
Right.
prove my skill, but it can also show people that if I could do it, you can too. Like there's really no excuse. You just have to put in the work.
When it comes to influencers or people in the trading space, I think it's absolutely mandatory. If you're going to charge people or do anything, you got to at least put some credibility out there. Like, this is what I do, which is the thing I rarely see. In fact, people who do anything but prove it. They'll show
Especially
anything
now,
else, but
nobody's
just a little bit
proving
of proof,
shit
which is so easy
now.
to do.
Yeah.
So I'm glad
Right.
you have
Nobody's
exactly.
doing
Which,
it.
bro, even my mom just pressing buy, sell, will get
Yeah,
a
she
winning
can get
trade.
one or two trades.
It's not a indicator of performance.
Yeah.
But now you've obviously done a lot more than just
yeah.
the prop firm space. So, and you've achieved a lot in your life financially. We see the cars, we see the
Yeah.
cool stuff you're up to. What kind of numbers are you used to now in terms of account size, winning days, losing days? What is the league you're in now?
So it was actually a lot bigger 2 years ago, because I was just really focused on my trading. And then to compare, right? Then I would have maybe like $300,000-$400,000 sitting in a trading account. And actually in 1 month, I had my first 7-figure month in the markets, and I was just having like
I remember
back-to-back
that.
100K days. But even then, bro, it was like I would show, okay, today I made 130K. I ended up shorting yesterday, I made $135,000. I literally showed like the internal transfer from the trading account to the wallet in the brokerage, from the wallet all the way to my crypto wallet.
he was doing that for a while too, where I remember on a day
Exactly.
to day, he was like, "Let me show you. Here's a trade. Here's a transfer. Here's the withdrawal." And I mean, he went through the whole process, and that was a big motivational point for me too, bro. Like, yeah, that was a time, bro. That was a time. Shit.
And then from the crypto wallet, I sent it. Yeah, I sent a portion to the bank, and I bought my friend a $25,000 watch, and I put it on YouTube. But even then, people were trying to discredit me, like, "Oh, it's like, bro." So I was trading with a lot more size back then. I feel like I had a bigger tolerance for risk back then because I just didn't have as many responsibilities as I do now. Like I have 2 daughters now, I have a wife.
Yeah.
So it's a little bit more difficult for me to want to come into the markets and be like, okay, here's $60,000 worth of risk. You know?
The last question I wanted to ask was exactly that. We see your wonderful wife is here, and you have 2 daughters, you said?
Yeah.
2 daughters. So life is different now compared to
It is.
earlier on, and that probably has an effect on how you think, your risk tolerance, and even how you approach the markets, and just life in general, and potentially even moving out to Dubai and so forth. So I wanted to hear life now as you've got older, with your husband now, and also having kids, and being a trader at the same time. Talk to me about that change in your life.
Yeah, I mean, so like when it comes to the markets, like I was saying previously, I had like a lot more tolerance for risk then. Like now, like my average trade size then would probably be like a maybe like a 25, like $25,000 risk, let's call it, and I'll be looking to gain maybe like $50,000, $60,000. Sometimes it'll work great, and again, it's like subjective on the trade. Sometimes it'll be smaller risk, like 10, 12, $13,000, and it could go all the way up to like $50,000 risk. I remember there was one day back then where a rate decision had came out, and I ended up putting like a $50,000 risk behind a specific position, and I was floating $180,000 in profit, and I ended up realizing like 125, 130, and I was able to go through those swings in P&L no problem. But nowadays, like how we just discussed before, when I was trading futures, I was only risking $6,000
Yeah.
and I made $30,000, and then I was risking another $4,000 and I made $25,000. So my risk is definitely toned down a lot over the last few years. And what I want to do now is I want to build that skin back up so I could really go and get myself outside of my comfortability and outside of that comfort zone to really push myself to the next level, because I only had one 7-figure month. Like I really want to go for like, you know, one person that motivates me a lot, not just like as a trader, but like as an overall person, how he moves, how he speaks, how he just conducts everything he does, is Umar. So the fact that he was able to make, I think in one
Umar.
year, almost like $10 million.
Is Omar the one that does the podcast?
Umar is, does he do a podcast? I'm not sure.
He's the one.
I know
He
him
does words of
from,
wisdom, right? Or he's with
no, no, no,
skill.
no. That's I forgot his, I forgot the guy who does that. No, no, he's separate. I think he's the actual owner of Tradezilla. Umar.
Oh, I know exactly. Okay, got it. I know exactly who you're talking about. Cool, got it.
Mm-hmm.
Dollars. It's like that's something that I want to do, and that motivates me. So, you know, speaking of Umar and being a pretty good friend of his, like he only is motivating me to do better, right? So I was very comfortable
Bro be
over the
doing
last like
$80,000
year,
trades.
right? And this year I was like, okay, not even
A
this year,
lot of
like
growth,
last year, it's
bro.
like, okay, like I want to have the best edge that I possibly can in the markets and really take myself to that next level when it comes to trading, so then I can just really push myself to that next level. And I feel like that's what life is all about, just pushing
Yep.
yourself to the next level, not just financially, but physically, mentally, spiritually, which I mean, having a family definitely puts a lot more weight on my shoulders, because I feel like I'm not like only responsible for myself anymore, especially having
Mm.
kids. But it's definitely helped me positively because it got me out of my comfort zone, and it's really pushing me to become a better man each and every single day. It's
Awesome, bro.
just like anything else.
Well, the last thing I want to ask before we wrap up is the Bugatti the best car you have?
Currently, it is the best
Yeah.
car that I have. Yeah.
There we go, bro. Well, open arm, welcome you to Dubai, and I'm sure we'll have good memories over here. And if you do move over, well, yeah, I'm sure you'll put yourself on the map here just as well as you have in Miami, bro. Thank you very
Yeah,
much for
most
coming on.
definitely. I appreciate it,
And yeah,
bro.
it was a lot of fun.
Thank you.
Yo, so that was a dope interview. I really like that interview. You can really see the growth as a person. If you guys been keeping up with Raul, I remember when Raul, when I first ever seen Raul on social media, I think he had a Mustang, and if I'm not mistaken, I think he had a GTR. And back then, his name wasn't even Lambo Raul; it was Raul GTR. And to see the growth, man, is crazy, man. Like he used to make $1,000 here, $2,000 here, like just below 10K range. And I remember the biggest day he had back then when I was under his wing was, I think it was like 30K on UJ, and it dropped because of some news event. And this was completely unplanned, and I remember seeing that happen, bro. And that was just like one of the craziest things I ever seen, bro. I've never seen something like that. And he recorded this. Like this was being recorded the whole time. And to see that and to see the growth of where he's at, I have nothing but respect for Raul. I think this was a great interview. I'm not sure what's really going on within the industry. Like some people were like this kind of discrediting him, but as a former student for sure, I think he's 100% that him. You know what I'm saying? I think he's the one for sure.
I'm still wondering why the video got taken down. This was a good interview, and anyone that's coming up in the industry or still trying to figure out their place, I mean, just listen how they talk. Very
Right.
thorough. And this is what I say all the time to traders that ask me questions. I'm like, bro, you're too lazy. You know what I mean? You're not doing enough because you're not
Right.
paying attention to what you're supposed to be paying attention to. And
Right.
even at the position that I'm at now, you know, I'm still getting my ranks. But it's good to hear other traders talk about what their way of market view is or what their issue were, and but just hearing it in a way to where it just, I don't know how to explain it, but just other than thorough, it's just very just straight to the point,
No, yeah, like
pinpoint.
it's basically like diving into the mindset of a trader. Like, for example, yesterday I asked you to break down a chart for me, not really just to not really to see the technical analysis, but to hear the mindset. And I think a lot of people probably need to tune off of the music or whatever they're doing and just sit back and listen to a couple podcasts or listen to people who are knowledgeable in the market and actually understand the mindset behind the the charts. You know what I'm saying? Like when you actually sit back and pay attention, like for example, Raul's talking right now, bro. He like listen to the terminology, listen to the way he just the way he carries himself will tell you a lot about how a trader is on the charts. You know what I'm saying?
Yeah. On the last topic, I just want to say for anyone that's still watching this video from here on out, remember trading is about seasons. So if you're having a bad week or a bad month, don't stop. Right? It's a part of the game. You just got to take it to the chin and just reevaluate what's not working for you or what is working for you and just keep it moving. But you're gonna have your seasons. You're gonna have your bad days. You're gonna have your good days, and so on and so forth. So just keep on going. Just keep on going because one day you're just gonna be like, damn, I already been doing this for 4 years. You know what I mean?
Right, right.
So
I literally made a video about this. I made a video. It's called "The Winning Mindset" on my channel, and it was basically just talking about just staying in the game, just staying consistent, sticking around. A lot of traders aren't sticking around to see the progression in their growth. How do you expect to stick around when you're gambling all your money and you think every trade's the one, and you blow your account and you can't even stick around to see next week?
yeah,
Like so
yeah, you
I
just
appreciate everybody watching this video, man. I think this is an excellent video. Great interviewer. This is a vibe like always with my boy Beezy.
we should start doing these more often,
And
bro. Honestly, like I kind of
yeah,
really enjoyed this.
nah, this was good. This was good. I
Yeah,
feel like we should start doing this often. You guys like this? Leave a like. Comment below if we should do another one like this. I think this was a dope experience. Um, I learned a lot just by sitting here and chatting with you. I did not know FTMO banned you.
yeah.
That's kind of like a crazy story.
You know, that's a different talk. We'll talk about that. Yeah, yeah. Those are the good days, huh? Damn,
Right.
that shit hurt actually. But yeah, but like this is a long video, so we're gonna cut it here. Everyone, subscribe to both of our channels. I'm gonna drop the Instagram links under the video. You could also see it right here on the screen. Rizzy, it was a pleasure, man. I'm gonna talk to you, bro.
All right, Brody.